Hey everyone, in this video I'm going to do my second installment of an Nvidia stock risk analysis. I know Nvidia stock has performed excellently in recent months and recent years, but it's not always going to be good news. Investors considering Nvidia stock need to know some of the downsides. That still doesn't mean you can't be bullish and enthusiastic about Nvidia stock. I've had Nvidia stock rated as one of my top stocks to buy all year long. Still, I dig deeply into the risks that could derail Nvidia as an investment. If you haven't already seen my first installment of the Nvidia risk analysis, don't worry, you don't need to see that one in order to gain good information from this video. And I will link to that previous risk analysis video at the end of this one. So if you want to look at further risks, you can do so. So let's jump into these details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so let's start with international sales and the risks stemming from that factor. So Nvidia is saying that their semiconductor wafers are manufactured, assembled, tested, packaged by third parties that are located outside of the United States. And they generated 48% of their revenue during the first quarter of its fiscal year 2025 outside of the United States. So roughly half of their revenue is generated outside of the United States, and almost all of their manufacturing happens outside of the United States. Those are big risks for Nvidia, although those risks have diminished somewhat. A couple of years ago, sales outside of the United States were closer to 70% of Nvidia's revenue. So there's more balance now. That risk has decreased. Also, manufacturing is expanding in the US. The companies that Nvidia outsources to are gaining traction in the US in terms of expanding manufacturing. Taiwan Semiconductor is expanding in the US, expanding in Japan. Those are friendly countries to the US. Japan is a friendly country to the US now. And so some of that risk has decreased, although there is still considerable risk for Nvidia stock investors because of its international exposure. Now, they have not received the licenses from the US government to ship restricted products to China, but they ramped up new products designed specifically for China that do not require an export control license. So if you weren't already aware, Nvidia has been restricted from selling some of its highest tech products to countries like China and others that are rated as unfriendly to the US. And that's because of the rising effectiveness of artificial intelligence. The US government deemed it too powerful, deemed it too strategically important to the US to allow Nvidia to sell these to countries that the US feels are risky. And so that's impacting Nvidia's business. And should these policies expand, that could be even worse, right? That's where the other 48% of its business could be impacted. The US government could change its policy to restrict Nvidia's GPU sales and say, you know what? These things are too powerful. We don't want you to sell it to anyone outside of the US. Even if it's a friendly country, we don't want you to sell it outside because we want all of that for ourselves because they are so valuable. So that's a risk for Nvidia stock investors to consider, although the trend for this risk has been diminished because it's already impacted the business so significantly because of the restrictions to China. China was a large market for Nvidia. It's now shrunk in importance. And so that part of it has already been taken down. And thankfully, that's been offset by strong demand from everywhere else. Nvidia, even despite losing access to China for the most part, is still supply constrained. There's more demand for its products than there is supply. So fortunately, it's been able to offset this risk. Customer concentration. Sales to one direct customer, which there's signaling customer A and customer B, two of their biggest customers, represented 13% and 11% of their total revenue for the first quarter of 2025. It's been no secret that the big hyperscalers are purchasing a great deal of Nvidia's products. These hyperscalers are Amazon Web Services, Microsoft Azure, Alphabet's Cloud, Oracle, and Meta Platforms have been big buyers of Nvidia's products. And that's high concentration to one customer, which is not ideal. If you're a business, you'd like to have your sales spread out so that if one customer decides to decrease sales, decrease purchases, or decrease orders, it doesn't impact your business too much. And then secondly, you retain the negotiating power if you have a diversified or more broad-based customer segment. If one customer is a big share of your total business, then that one customer can exercise strong negotiating power against you and say, if you don't give us a good deal, then we're going to go to your competitor instead, and we're not going to buy from you, we're going to buy from someone else. That's not the case for Nvidia just yet, because there's so much demand for its products. Nvidia still retains strong negotiating power, and that's evidenced by its very high profit margins. Its operating profit margin is approaching 60%, which is remarkable. Gross profit margins are above 70%. That's typically evidence that the company has strong negotiating power, but that's right now. If there should be a change in the market, they could lose that, and then the customer concentration will become a greater risk. Right now, it's not a very big risk, but it is there. It is there, and it could become worse over the next few years if market dynamics change. All right, and they go on to say that because most of our sales are made on a purchase order basis, their customers can cancel, change, or delay these product purchase commitments with little notice to us and without penalty. So, Amazon could tell Nvidia, look, we want 10 billion worth of your GPUs for delivery in January of 2025. And then in December, they could call Nvidia and say, you know what, never mind, cancel. And there would be no penalty to Amazon for changing their mind and saying, you know what, we don't need it. And that's a risk for Nvidia, because when Amazon orders these products, Nvidia starts producing and planning to ship it to them. And then if they cancel in the last minute, Nvidia could get stuck with those inventories. Now, again, because of the market and how supply is less than demand right now, it's not that big of a risk, because it's very likely Nvidia can find another buyer of that inventory relatively quickly without offering discounts, because the market is working in its favor. But in other times, let's say 2 years in the future, when supply and demand is more balanced and Nvidia still has this policy, that's a risk for Nvidia that they could get stuck with this inventory. But for now, that risk is also muted. Another risk is that these partners, like Amazon, could develop their own solutions. And we've seen that from the likes of Amazon and Alphabet and others that have said, you know what, we're going to develop our own chips. Sure, they're not going to be as good as yours, Nvidia, but they'll be lower cost. And some customers might want that lower cost option. And because the market right now, you don't have enough supply to meet all the demand, we're still going to gain market share because you don't have enough supply to meet all the market demand. And so that can give their customers a leg up. And then if they can continue on that trend, if Amazon and Alphabet like their own chips and they develop them sufficiently to be at least close to Nvidia, it doesn't have to be, one step behind or even 2 steps behind. If they can even get, 2.5, 3 steps close to Nvidia, they might choose to just use their own chips and stop paying Nvidia these premium prices for their GPUs. I'm not saying that's going to happen. That's just a risk, and Nvidia is highlighting that risk here, saying, look, we can't get too comfortable because these companies are going to try to develop their own solutions because they spend so much money on our GPUs, they might want to internally develop them instead. And then lastly, they say many of our customers do not purchase directly from us, but through multiple original equipment manufacturers, system integrators, distributors, and other channel partners. These are companies like Dell and Hewlett-Packard Enterprises that work with Nvidia to create and install these data centers. And so some customers might buy a whole system from Dell, and then Dell buys from Nvidia the GPUs and then sells it to the third party as a full system rather than just the GPUs. And so that's an interesting relationship that's working in Nvidia's favor right now because it has partners that are helping distribute its systems. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.